Welcome back. The communication services sector is up a whopping 17% this quarter with just 2 trading days to go. And names like Netflix, Disney, Alphabet, and Warner Brothers Discovery having a very strong start to the year. Will this group see more upside in Q2? Let's bring in Macquarie analyst Tim Nollen for his best ideas. Tim, one of the most interesting storylines in the sector, I think, is this, what I guess is a game of chicken between Disney and CNBC's parent Comcast over who's going to end up with Hulu. Which eventuality is priced in? Disney buying a third, Comcast buying 2/3, somebody else ending up with it?
That's a question for Disney to face up to over the next few months. You know, the general assumption was that by January 1st, 2024, when this put call comes into effect between the two companies, that Disney would want to buy in that other 1/3 of Hulu that Comcast owns. I think Disney CEO Bob Iger's comments more recently have kind of thrown cold water on that view and made a lot of people wonder whether Disney might look to actually sell that stake. Comcast has publicly said that they'd be interested in acquiring it. Maybe that's just posturing to get the price of it up. And so we'll see what they really want. But I think it could attract some other interest from other parties. And I think more importantly, to your question, I think Disney is maybe looking more intently at selling that stake rather than buying in, because it's a very competitive market. It is arguably not core to Disney's franchise of children's and family entertainment and, of course, ESPN. And that's another big question as to what's going to come with ESPN and ESPN Plus. So, you know, I'm starting to question whether Disney might look to sell off that 1/3 stake in Hulu at this point.
Okay, so after the sector has gone up so much to start the year, what's the best value? What should investors buy now?
Well, if you're comparing some of those names that you threw across the screen at the top, you know, WBD, Warner Brothers Discovery, is still much cheaper than Disney and Netflix. And sure, they've had good runs in the quarter, but these stocks had pretty terrible performances last year. And so some of this just kind of rebound the first part of the year has just been recovering some of that. If you just look valuation-wise, and if you look at the storyline, I think WBD stock still has quite a bit more upside, given they're getting the HBO and the Turner assets bedded down within the structure. They're trying to be much more rational on costs. And that stock is much cheaper. I think the upside to Netflix is still there as well. And I think Disney has perhaps a bumpy road ahead as they try to figure out what they're going to do and what the news flow is going to be. But both of these companies, Disney and Netflix, are looking at having rolled out this new ad tier for Netflix and for Disney Plus, respectively, just in recent months. And we don't have much information on it, but I think that's an important component to the story going forward.
Right.
It'll take time to roll through, but you know, that's part of what's going to drive the interest in these companies and these stocks over the coming quarter and year.
Tim, we got to leave it there. I appreciate it. Tim Nollen.
Thank you.